Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for April 13th, 2022. And let's see what we have going on here. It's the agreements of the OWL True Story roundabout there for you. Let you get a screen capture of that. So this morning, got a TC 2000 alert on one of our structured trade frames. It started off with a gap down and then gave us a second alert when it moved a minimum manageable risk box off the low. So by this time we got it framed up, saw the swing low. I was prepared to buy it pretty soon here. So I'm stalking it. Missed it. So I see it pull back all the way to this. Here's what I was looking at this thing as like a rising. So that was my line to go short, was the thick red line. And I just drew this line to connect the lows and then offset it with a parallel line. This sort of the yellow zone would be the buffer. I felt like this was a Kata 2 and almost another little Kata 2 inside here. If I was drawing this correctly, I probably should have had this, right? So I decided to take that entry with an MMRB off of this first rising line. By this time, you got to be at no lose plus dinner for 2. Something like that. I wouldn't be offended if you ran that up to here. I wouldn't be offended if you took that exit. But to be honest, I was monkeying around with this rising low and this little buffer. I was going to give that a try. So it never violated my little buffer. It was coming back to that first diagonal line. Felt like a signal line. And then when it finally broke through the noise buffer, I took that one. So it was kind of I wouldn't be offended with stops at either one of those. If you do, you have to take either this one or this one or this one or this one as your Kata 2 entry, and all of those pay off. So I was trying that little exit strategy where you have like an offset and a noise buffer. So this one from green line or green dot to red dot returned, I think about 3R on the regular box. So it's just trying it out. Not sure what I'm calling that one yet, but that's what it was. All right, so today let's take a look at what we had. So yesterday closed poorly. Oops. At a new 10-day low. Today gapped open just to about the same level, but then then closed. Oh, my brother asked me what that slope was. It was just the first blue line I just drew was connecting the lows of the first two positions, the swing lows. And then I just extended that line and said, well, if this, as long as it stays north of that line, it should still be a positive move. And then all I did was I cloned that line. Let me redraw that again. So I just cloned that line and moved it to the edge of this box and said I was willing to take that as a noise buffer. So you don't want to, until it breaks through the noise buffer, that signal line is still intact. You can afford a little slippage and spillage in there. But I was treating the noise buffer as a to keep me in, if you will. It had to give me a significant series. So I was just monkeying around with that idea. You see that in a lot, like in PSARs and trailing stops that are offset. So it gives you a little bit of extra time. So just playing around with it. Nothing formal to report on it yet, but that's where ideas come from, is by monkeying around. I don't give them names and show rules until they're ready for prime time. But that's what I was working on today. So, yeah. So yesterday closed poorly with after a new 10-day low. Today opened where it closed and then gave a pretty strong directional move. It's still an inside day, right? So we got no new directional signal today, other than to say that it could have failed, but it didn't. It didn't make a new low. It stayed within, it stayed above yesterday's low and the 10-day low. It did not make a new high, so there's still it wasn't quite as strong as yesterday. But the one advantage for today was that it started low and closed near the top, in the top 10%. So that's actually a positive thing. That was enough momentum to make the 3-period hull roll up. The slope of the 30 is strong up. The slope of the RL 30 went from down to slightly up. So that actually improved. The dragon is still sloping down. So this is a mixed bag. So today was basically failure to fail further. So we're getting something like a consolidation range inside today's range, looks like that. So today was, the most important thing was it did not fail. And it closed above the Bollinger Band mean. So the upside is still a real possibility here. So that means I'm willing to get long right here tomorrow. What would we call this entry at that green dot? Let's say it opened inside the range and then broke out of that. What would we call that? Yeah, a 1, 2, 3. So there's a 1 because it made a new low. This is a 2 because it closed with a higher low. So here's a low, here's a higher low. That makes this bar 2, and in retrospect, that makes that bar 1. So you don't know that bar 1 is bar 1 until bar 2 closes, because until bar 2 closes, you can't say definitively that it didn't make a new low. So as soon as this tentative bar 2 closes here, then in retrospect, that becomes bar 1. So now you have a 1, 2, and now a breakout above the high of bar 2 gives you a 1, 2, 3 entry, provided that it has not taken out the low of bar 2. So if it opens anywhere inside here and then crosses through today's high, then that becomes a 1, 2, 3 entry. So it basically takes the form of this. That's your 1, 2, 3. These are all daily bars. So I don't understand your question, Chris, about overnight. It opens, it has to open inside today's range. Like if it opens lower than yesterday's low, then that's no longer bar one and bar two because it just made a new swing low and the count starts all over. So what we're looking for is some kind of sell-off pattern that terminates in a swing low, and then you get an orderly two more higher lows, and this one takes out the high of bar two, and that's what gives you a 1, 2, 3. That's explained in the foundations course. Okay, so this was like a consolidation day. It did not fail further. The upside momentum is in place as indicated by the 3-period hull. The 30-period regression line slope actually got better today. So this, in the long run, we could end up seeing this as a low in the RL10 here. And then if this RL10 reverses up tomorrow, we'd see this as the swing low in the RL10, which means that this 1, 2, 3 entry tomorrow is taken on the form of a kata 2. Now it's not officially a kata 2 until it takes out, that rising PSAR. But I would be well prepared tomorrow just to take that here on a 1, 2, 3 exit. And then when it crosses the descending PSAR, then that sort of confirms the move. If it takes out the swing high of the dragon right in here, then an entry here would be an emerging dragon. So there is a little hierarchy of possible entries happening in this ladder. And the earliest I'll get in would be this one tomorrow on a 1, 2, 3. And I'm happy to get in on that with this yellow box as my risk. Happy to do that. See what happens tomorrow. All right, so the sectors today. The S&P was up 1.15. Diamonds were slightly underperforming at 1.03. Treasuries eked into the green at 0.2. Emerging markets slightly better than the market at 1.3. The Russell was pretty strong at 1.9, and the Qs were the strongest at 2%. There were only a few things underperforming the market, so let's look at the sectors first. Commercial real estate at 1.1, marijuana, Mexico, and staples down to 0.56. So when the staples are underperforming the market, that means it's tilted back towards growth. You got Brazil, finance, agriculture at minus 0.13, and then the VIX was off 4.5. The only target that was in the red, PayPal minus 2.8, and everything else was north of the line. Okay. All right, let's look at the sectors that outperformed. Basically everything else. Lumber, 1.25. Materials, energy, tech, up 1.6. You had the other lumber at 1.96. The FANGs, lithium, blended commodities, wheat and precious metals up to 2.25. Consumer discretionary, 2.5. ARC Genomics, 2.6. Oil exploration, clean energy, blockchain, moonshots, global future of finance was up almost 3%. ARC innovation up 3.16. Oil 3.2. So quite a lot of a wide array of winners today. S&P Bio 3.7. Bitcoin futures 4.8. Bakkt Holdings 5.35. Blended large cap commodity, or a blended large cap crypto, I should say, 6.5%, and then Ethereum up 7.8%. So quite a range of winners. Individual targets that did well. Alcoa up 5%. Robinhood 4%. Cliff Natural Resources 3.96%. Tesla and Coinbase up 3.5%. Squarespace and Devon up 2.5%. So the metals and the energies doing very well today, and basically all of crypto. So I'm looking for more follow through from the leaders today as it rolled over from staples into discretionary. We talked yesterday about Tesla having an opportunity to gain as it was approaching 1,000, and it broke through to 1,022, 3.6%. So I'm looking for more out of Tesla tomorrow. We'll take a look at the reports. We came out of the bear back into sideways normal. It was a one-day bear market venture. Got a little boost here on the 2-day. The risk Z is still giving us a sign for risk on. Now, notice that the decline in the risk Z is slowing down. So if it can hold above the 0 line and refresh, then that suggests almost like a Kata 2 style. It could continue to the upside. That would reinforce this Kata 2 status, if you will. Latin America is postured to benefit tomorrow. I'd be watching that, and Brazil, to be honest. Min Paints, Coke, Nucor, ExxonMobil, Chevron, Walmart. Tesla still has some room to recover in the max pain. Microsoft, Cisco, and Intel. So there is room for tech really to move into the lead again tomorrow. So we're going to see some auto framer trades available in those symbols, I think, that are worth looking at. Tons of auto framers here in the Dow. So let's see if we're right. Yeah, so there's Apple 2.3, Cisco 4.3, IBM and Intel 3.4 and 6.3 in tech. Microsoft 3.8. So there's some quality names in that list right there in the auto framer that are absolutely worth looking at. And Nucor Steel, I mean, I don't know how you argue with that domination in every time frame. Metals were so strong today that we should be ready for that again tomorrow, or just keep watching it go up. That's up 104% this year, 10% in the last 10 days. So you decide how long you want to watch those things before you trade them. ETF 30, plenty of sectors on the bounce here. Metals and mining and energy should be on your short list because they've been so dominant. You can see that's coming from strength in oil. This might be the move for clean energy now. You know, it's had a pretty good 1 month and got smashed on the 10-day, but now it had one good day of recovery. I think I'll be ready to get that one tomorrow as a short-term rebound. I'll be watching for that one. In the auto framer, so many to choose from here. And again, I just work my way from the top down based on reward to risk because these have the longest move to recover back to their 10-day high. But if they fail, then they're also postured to break down to the bottom because they're so far off their 10-day high. So I'm looking at Intel, treasuries. There's your Cisco again. These three, finance, Microsoft, and S&P Tech. You got to like all of those. We're in sideways markets, so yellow zone should be at the top of your priority list for things to prepare. So I like, my defaults are these in yellow: Brazil, S&P, diamonds, and Tesla. Four Seasons being dominated by fall in both the ETFs and the Dow. The usual suspects for, the top 5 candidates listed at the bottom because they're heavy and good and they fall to the bottom. Coca-Cola, ExxonMobil, Devon Energy, Chevron, and Walmart. That's your energy and staples right there. There's consumer staples looking pretty strong, XLP. And here's all your energies: oil exploration, energy itself, oil, metals and mining. It's all those raw materials. All right, let's take a look at some trades here. So here's a we'll do a bar by bar first. Here's a symbol that was on our short list of things to be prepared for, and that's it closed at the vertical blue line. We notice the oversold. It's going to open with a bit of a gap up, which gives us the uptick. So now we're going to, so I'm going to slide that over. So now I'm going to be ready to buy the candle breakout just like that. And I'm consulting the previous day's noise range. There's one. So my tentative play would be here. I would not be offended if you you decided that you might want to use the low of the day. So I would not be offended by that. So we would be ready to buy the green line, and then you could decide on your sheet of paper right now, which, if I put you into this trade and said, we're going to enter at the green line, where would you put the stop? I could make the argument for all of these right here. Where would you enter? I mean, if you entered at the green line, where would you put the stop? 1, 2, 3, or 4? Now let me draw a distinction now between the position sizing stop and the execution stop. I'm going to put the execution stop at 1, because if it triggers me green and then immediately rolls over, I'm going to get out at 1. So I'll just make that the execution stop. And then what I will do is I will set that equal to a 0.2 loss. And I will just declare that that's the size of the loss that represents. So I will use 5 times that as a 1R. And that way I'm never going to blow up my account, and I'm trading in fractions. So my blood pressure is low. So I would use 1 as execution. And then my position sizing stop would be 5 times that. So for me to take a 1R loss in that thing would have to be down something 2, 3, 4, 5, probably somewhere around there. If I get out at 1, I could see why getting out at 2 would be a psychological, benefit. But really, if this thing is going to work, it should go. It should not come back into all of this consolidation zone yesterday. I'm looking for this thing to go. So I get a larger position size by taking an exit at 1. So there's my entry. So somewhere by this 1 execution R in hand, I should be at no lose plus dinner for 2 by the time it breaks through that line. Okay, not going to lose money on that trade. And I've locked in some kind of gain. Now, you might decide, since you're already more than 1 R in hand, that if you put a stop like right there, you would have locked in half that bar. And then you could say, look, I want to 2 minutes into this trade, if I put my stop right there, the worst thing that happens is, to me, is I'm going to leave with 1.5 R in hand, the execution R. So you can do whatever you want. You can decide how long you want to stick around, all that jazz. But my main concern is to get you to no lose plus dinner for 2 right away. So on your sheet of paper, what would you take 1? I'm going to put 2 as, what if I just put it below the 1? So that would be 2, right? And then 3, if I did the pure no lose plus dinner for 2. So you have some real choices to make here. And there is no amount of back testing which should give you any confidence that you could pick the correct answer all the time, forever and ever, amen, right? Back testing is not any good for that. So it really does come down to you being satisfied on every bar. You got to put your stop where you, the individual trader, are satisfied with the outcome if that were to be hit. So make your decision on your sheet of paper, 1, 2, or 3. Now, I want to show you what triggers me, and your mileage may vary. I like that bar. Right. I like this one that opens without, it opened where the previous one closed and then it moved higher. I like that. I like that this one immediately went higher. But I'm already not liking the fact that it closed lower than it opened. And so that's the kind of thing that would make me want to go to here and take half of the second bar. And I might have just decided to take that one on the way down. So I'll let you decide right now if you want one or two, or three, which would be something like that. Do you want one, two, or three? Just record your answer on your paper. Keep track of your choices. But I just wanted you to see that this rollover where it closes lower than it opened is one that is a concern to me. So those of you that had two got hit on two. Those of you with three are still in, and it reversed higher. Now, if you got out at two, are you back in now? Or are you going to wait for a breakout above the all-time high? Which one of those do you want? See a strong preference for this, which is essentially a universal entry. Okay. That would be your standard risk box, is the yellow box. So if you use that as your guide towards position sizing, you could still do that and simply decide where you would take your execution. Would you take your execution at the low of the first bar? Or would you already move to no lose plus dinner for two? Or would you take a 2-bar low? Or would you take the full standard minus 0.2? Think of that from north to south as 1, 2, 3, 4. So again, that's a good problem to have. Wouldn't you just put it there anyway? Oops. Don't you just like the way that feels already? Rats. So you got out there. And knowing your preference, you'd probably want to get right back in there, wouldn't you? So those are our trades so far. And we're probably something like that. And probably done. Wouldn't you? Would you be willing to call that the series? Sure. Go take a 15-minute walk, put some water on your face, wait for the next alert. And you got most of the move with those first couple nice little moves. In terms of execution are, you got 1, 2.5. And then you got 1.5. So this little series right here is 4 execution R. Now, how hard do you have to work if what your goal is 4 execution R a day? Do you have to try to get every possible squeeze out of, or can you just be patient and take what it gives you until you've had enough? So this is all about finding that critical state. It moves in your direction, quickly getting to no lose plus dinner for 2. If you get the entry and it does not move for you right away, get out, because it's not doing what it is supposed to do when it's easy. What it just did right there is what it is supposed to do when it's easy. And I only want to trade when it's easy. That was Ethereum. And that was Ethereum on the it had been this little, that was the move yesterday. It was at the end or at the bottom of that like 10-day low. And today was simply the normal recovery up after a harsh sell-off. which acts like a kata 2, where you see the low and then the higher low and just this little rebound. And that's a 4R move in the first hour on an inside day. You don't have to work that hard. If you calibrate what it is that you're looking for and decide how much of the move do I have to make my little nuggets, and just go to the, if I was a hunter gatherer, I'm just gathering berries, just go and fill up my little bucket until I got the amount of berries that I need to go and feed the tribe. That's all I need. Or are you going to stick around and see if you can't get every single berry and try to guard each and every one of them, and then you miss the fact that you're being stalked by a lion? Oops. So get in there, get your berries, get out. All right, let's take a look at the traders today. All right, here's Tim doing the work. And he just experienced some breakthrough moments these last couple days as he begins to understand what we just said. I want you to see this as the tale of two 50s. This set of 50 and this set of 50. What do you notice that's different? Yes, this. He's not sticking around for all of these losses down in here. All of these losses that were in here around 0.5 are now all of these little scratches. And all of these little moves are now these moves. So he's taken everything that used to be down here and has nudged it up into here. He took all of these, nudged them up into here. And these things that were here, he's now nudged up into much bigger wins that he's not given things back on. Just that what he has done is shifted the mountain to the right in his first 50 unto his second 50. It's not until you do that, till you do 100 trades, that you can begin to see the benefit of micro improvements across the board. A 0.25R improvement over 10 trades is 2.5R. Those little increments add up. So in his 100 trades, his best score was 2.7, worst was -1. That's good. Equal number of wins and losses, and his average payoff was 3 to 2. Now, just on the basis of the first 100 live trades, what he has is a coin flip that pays 3 to 2. Just with what he's done so far. How many times a day do you want to trade that system? If we sat down at a table and said, let's flip a coin, if it's heads, I'm going to pay you 3. If it's tails, you're going to pay me 2. How many of those games do you want to play a day? All of them? Yeah, all of them. In the real world in Vegas, you'd be hard pressed to find somebody that would even take that the other side of the trade from you. But this is, if you take a look at his second half, it's going to be much better than the first half. This is a 3 to 2 payoff, including that first set of 50 where he's just kind of monkeying around. And you can see the mental shift that occurred in this part of the curve. And now I'm really interested in seeing the next 50. So Tim, I want you to do these in sets of 50 now. And then when you get another set of 50, compare this 50 to that 50 to that 50, and then do that as a set of 100. Because this feels like there was a breakthrough that was made. Okay, so good work. This is my argument about learning to trade by trading. If you're going to be a wood carver, carve wood mindfully. Learn something. Don't waste the wood. I understand that there are other theories of how to do that, but that's why it's a great big world, and people are free to find their own ways. All right, Griff. I get Griff and Phil working on developing the Kata trading course. I've given them some guidance, and we're working on that one. Here is the collapsing dragon only. Net capture today to execution R. Perfect entry off of this collapsing dragon. Notice that the CD or the RLXD was available here, and the owl entry is here. The CD entry is here. He gets to no lose plus dinner for 2 and increments downward. Great exit, 1, 2, 3 exit. Greater re-entry. And notice that he has already internalized the idea that when he stops and reverses, even though the standard work is here, he's only going to take the execution loss here. So if this were 0.2, this would be like 0.05. So you can be fearless about continuing to take those because your actual risk to portfolio is small and you can get a lot of reps. And then you can learn to scale. But you don't even have to scale if you're making 3 times your actual execution risk. And look at that beautiful rebound off the VWAP. He doesn't stick around. He just takes it. The re-entry, it didn't work. So as soon as it reverses, he just gets out. It reverses over again. So he tries it short. It didn't work. So he gets out fast. He's not waiting to see, oh, is this going to give me a -1 art? No, it didn't work for you immediately. So he gets out. Here's the collapsing dragon. He notices that this is a pocket entry in the same way that this would have been a pocket entry. The dragon has rolled over. Looking for the RL30 on this rascal. Yeah, there it is. It has rolled over. So that's actually an owl entry or a pocket. That's the other name we have for it, called a pocket entry, because it's in this little pocket. Here's where the official CD is. So this little window of opportunity here feels like the, like in sailing terms, a little quiet cove. And so it crosses over so you can quietly get this entry in the pocket. And then that's the one that confirms it. And then if you'd taken this entry, that would be your exit. If you took this entry, that would be your exit. So to me, why not? Here's a collapsing dragon, pays off a little bit, a little bit, a little bit. 2R just on CDs for today. Doesn't count either one of these or this one. So we'll see those markups from him tomorrow. Here's Tim with another 4R day. Like I said, it feels like he has turned the corner on this. Let's see what we can see here. All right, so he doesn't start trading until here. I might have been tempted right here anyway with that little risk box. He waits for the crossing of the Bollinger Band mean. I'm not offended by that. He gets that quick 1, 2, exit when it comes back to the VWAP. I love that exit because that's 0.5. Isn't that better than waiting for the declining PSAR to just tick you out? If that thing is going to work, it's supposed to fail right away. It didn't. So he takes half an hour and goes home. Here's the PSAR flip, standard work, gets a scratch, maybe a micro loss. There was a COTA 2 entry right there that probably would have scratched. Here's the RLX, the PSAR flip. This is also where that crossing of the VWAP or the Bollinger Band mean is available. The crossing of the VWAP is there. He waits for the CD, gets paid, good exit, perfect SSC, perfect exit on the 1-2 exit, waits for the crossing of the VWAP and the Bollinger Band mean and the PSAR. That's a screaming short by every measure. Second position, nicely done. Perfect exit after an excursion all the way down here and recovers. He gets paid on both of those. And he does notice that with the second position, getting to no lose plus dinner for 2 feels harder because you're realizing that each adverse move is losing twice as much. And that second position hasn't earned that much. That's why I would just say, until you get bored with the one position, I'd just stay with one and really trade that well. I like this quick loss, stop and reverse, got paid, quick exit. I think your reentry could have been here. I don't mind that you waited for the crossing of the Bollinger Band mean, but look at how much you did give back. Exit was a little bit slow, should have been at the VWAP instead of down here, but still, we'll walk out of here today with 4.4 and be happy. Very good work. The rest of these, no, here's a trade. Yeah. WMB3, so here's the oversold. Here's the first uptick. So he should be long here. He should be scratching this somewhere in here and getting short. Quick scratch again. I think this was slow. That's too much of a loss, and that's too much of a loss. When you're already down that much, down 2, and you have this much favorable excursion, that's given back too much to just net 1. And then here's a fail. This could be the second position short. Another CD short. Here's our oversold uptick. Buy it. Nice. Oversold first uptick here. Buy it. This should be entering right here, not up in here. I don't mind that exit. This is a COTA 2. Could have been had here. And then this would have gotten me in probably and gotten me out right away. So good patience. And then naturally you're not around for the big move of the day, but still this is, I think you made money on this one today, didn't you? Wasn't all that impressive, in terms of the size of the moves, but the moves you did get were the ones that mattered, and you're getting more concise in trimming your losses, and that's making the difference between winning and losing. Over the long run, that's decisive. Okay, quick frames from Glenn to close out the day now. Here's AbbVie Incorporated Healthcare. Like that uninterrupted run to the top and a rollover into a nice consolidation. Here's the top. Here's the bottom of the weekly. So you have a nice move in either direction. Very concise risk box. This thing didn't fail, but it didn't explode. So that means it's a coiled spring ready to burst or ready to collapse. So this feels good with a 50-cent MMRB. Nice work. Good find. Chevron. The first thing that just jumps out to me is this rising Kata 2. And then this breakout is already at the emerging dragon. So that has no reason to ever slow down. And then the breakdown from here gets you all the way down to this target at 169. So that's a perfect zero state. You can just see how crazy energy is, and the inflation's not going to get fixed anytime soon. It's at a 20-year high. All right, here's Bank of America. Strong support on the weekly right here. And if it fails, that collapsing support will be decisive to the downside. So that's a great frame for the fail. And then there's plenty of room to get up here to the 10-day high. I mean, that's a 12% gain and a nice, reasonable risk box here of about 50 cents. And a breakout and a breakdown. So Bank of America, well postured. Good frame. Walgreens has stabilized right in here in this long sideways chop, halfway up and halfway down. And when you're only halfway up, you're neither up nor down, says the rhyme. 20-cent risk box ish. Yeah. You can see that is so routine that it almost is embarrassing to draw it. That's how typical, normal, and ready to go in either direction without any thinking whatsoever. You know, trade that 1,000 times without thinking, and you'll be glad you did. All I'm trying to do is make money. Yeah, it's already above the ED. So any breakout is free and clear to the upside, and up it'll go. And this is a case where it is already nearer the top of that trading range, the weekly trading range. So it doesn't really run into resistance till it's up around 70 in DuPont here, or Dow Chemical. So I like that one. That's the case where it's near the top of the weekly and daily stack. So the breakout is just no resistance overhead, and off it goes. Whereas the failure is a recovery down to 61, then 60, and then 58. So a clear descending step ladder, if you will. Okay. So nice work, fellas. And my brother's here, so we're going to go spend some family time, eat some of that good leftover sushi, and he's going to head out and California tomorrow to start recording his sniper course offering to that down trace. So I hope that just keeps him really, really busy. So I'm really proud of him. All right, fellas, take good care. That's all I got for you.